It is the end of the Second World War, the deadliest conflict in history, but it also marks the rise of America as the most powerful country in the world. The dollar is now the world's reserve currency, and one American bank has climbed through the pinnacle of the banking world, becoming the largest private bank in the world, Bank of America. Bank of America was the largest bank in the nation by assets and market capitalization. Today, it serves more than 68 million customers in the US and internationally. Behind this banking empire is a financial titan of unlikely origin, the Italian immigrant Amadeo Giannini. It's a game for them. When you are at that level, it has always become a game of confidence, a game of learning. Giannini's childhood is anything but normal. His father, Luigi, arrived in California during the gold rush and soon built a successful real estate business. The family thrived by buying properties and hotels, renting them out to other Italian immigrants. His father was a hardworking entrepreneur who made his first fortune in fishing, farming, and viniculture. His farmer, Luigi, invested all his savings in resting and renovating a house, which he turned into the Swiss Hotel, which catered to Italian laborers. After 2 years as the owner of the hotel, Luigi successfully sold it and with the proceeds bought 40 acres of land in the small town of Aviso. But Giannini's peaceful childhood was abruptly shattered by a life-altering incident. Giannini was 7 when his father was shot dead during a labor dispute. The tragic death of his father forced young Amadeo to mature quickly and take on new family responsibilities. It's called post-traumatic growth. There may be things that students and young people take from it: a greater sense of maturity, a different sense of purpose. His mother, Virginia, a young widow with 3 children, stepped into her husband's role managing the farm. At this time, Giannini learned the value of hard work. He had to live a very disciplined lifestyle from a young age, getting up early in the morning to sell produce with his mother. But the experience allowed him to gain practical skills and knowledge about how business operates. Giannini's mother, Virginia, soon remarried another Italian immigrant, Lorenzo Scatina. The two met while she was selling her produce and they became good friends. He was a gentle, amiable man with a ready smile, and her children seemed to love and respect him to the point of calling him Pop or Boss. Lorenzo takes over the family's farming business, and Giannini becomes the bookkeeper, and soon his business size. He was a skilled operator. At the age of just 14, he expertly handled the logistics of the family's grocery business. For example, sourcing orange from Southern California and bringing them to San Francisco. At just 21, he fully took over the family business, leading it to unprecedented profits. He had a unique way of doing business and was especially interested in laying a foundation of trust and goodwill. as well as building relationships that will support his father's business over time. His work focused determined on going on the go, either by horse, buggy, or riverboat, working more than 18 hours a day, often skipping lunch, which he deemed a waste of valuable time. In 10 years, he transformed the family's farming venture into a successful grocery store in San Francisco, generating hundreds of thousands of dollars a year. But then, at the height of his success, Giannini does the unexpected. At 31, he retired from grocery business, eager to find a new industry to conquer. The early 20th century brought industrial growth through the Bay Area, with shipyards, manufacturing plants, and other industries emerging. The influx of population and business into San Francisco and his suburbs led to rising property values. Giannini recognized that real estate and banking are at the heart of this economic boom. To break into this industry, he needs capital and opportunity. At the time, his wife came from a wealthy family, and when his father-in-law passed away, he left his entire inheritance to Giannini instead of his own sons, demonstrating the immense respect he has for Giannini. The inheritance includes real estate holding and stock in a local bank, but Giannini quickly realized that the bank is corrupt, much like the rest of the industry. To make a real difference, he needs to start his own bank, AP. Being himself the son of hardworking Italian farmers, founded his own bank, mainly because he was outraged by how other banks in North Beach neglected the Italian citizens of San Francisco's Italian colony, which included his own family. The majority of his customers were immigrants who could hardly speak English. By giving out loans to the working class, the Bank of Italy becomes a hard hit. By 1905, less than 3 years after its launch, the bank amasses $1 million of capital. The future of the bank looks bright. The 1906 earthquake completely changed how he saw the science of earthquake. So earthquake woke everybody up early in the morning on April the 18th of 1906. The epicenter was on San Audrey Fortress, upshore from San Francisco, and then east ruptured to the north and to the south along the fault. Most of the city at that time was wood frame construction, but there were some steel frame buildings. And so earthquake did a lot of damage across the city. But of course, most of the damage was actually due to the fire that followed the earthquake. The San Francisco earthquake of 1906 is one of the most destructive in the recent history, resulting in immense destruction and followed by uncontrolled fire that consumed much of the city. Before the fire reached his bank vault, Giannini and his stepfather lost the bank's funds, including cash, gold, and silver, onto wagons, ridiculous with grades of fruit and vegetables. They endured a grueling all-night journey to reach San Mateo. Giannini's foresight and quick action proved ingenious, while other banks are rendered improbable. how he established a regulatory banking operation on Washington Street using a massive debt to provide immediate financial support to those affected by the disaster. Giannini and his bank made an extraordinary move. Most banks at the time were afraid to lend money, but Giannini offered unsecured loan to anyone based on only personal trust. Giannini has turned a disaster into an opportunity. After the earthquake, the Bank of Italy became the most trustworthy bank in the region, and people began to pour their deposits into the bank. During the panic of 1907, Giannini's strategic foresight and decisive action once again safeguarded the bank's stability and customer confidence. Despite initial resistance, he expanded to Los Angeles, bringing inclusive and accessible banking to the rapidly growing city. Giannini's vision soon extended beyond California, creating a network of branches that provide reliable financial service to the community in cities like Chicago. But to truly building a banking empire, there one city he needs to break into, New York. But there's a problem. New York is already dominated by another tier, Immigrant, and he is not about to let an outsider intrude his territory. After his success with the Bank of Italy, Giannini realized that branch banking is the future. Envisioning branches of his bank spread from coast to coast and ultimately globally. To do that, he needs to open a branch in the most prestigious city in the world, New York. Following a record year of profits, Giannini used the additional income to acquire Bank of America at 44 World, a struggling mid-sized bank at the time. He then merged Bank of Italy with Brewery and East River National Bank and the Commercial Exchange Bank to form the Bank of America National Association, making it the third largest bank in New York. But Giannini's rapid advancements into New York is seen as a declaration of war to the king of Wall Street in the time, Jack Morgan. In the 1920s, Jack Morgan is the most powerful banker in the Wall Street. His father, the notoriously ruthless Pierpont Morgan, has created the world's first billion-dollar company, U.S. style. His father, Pierpont Morgan, was a legend, the founder of J.P. Morgan, big personality, a big person. Obviously, knew everyone around the world after J.P. Morgan passed away. Junior inherited a fortune like no other. Morgan has the money, power, and enemies. He once survived an assassination attempt by wrestling the gunman to the ground. Seeing the rise of Giannini and his Bank of Italy, Jack Morgan realized it's time to show who is in charge. After Giannini established his presence in New York, J.P. Morgan launched a smear campaign with a single objective to crush Giannini bank stocks. At this time, Giannini contracted by polyneuritis and had to seek treatment in Europe, and Jack Morgan used this opportunity to rally other banks and traders to attack the stock of Giannini banks. Within weeks, the shares plummeted. Giannini knows Morgan is behind the efforts to discredit his bank, but he did not want to back down from a fight. He funds a new company called Sembrico Corporation, a move designed to consolidate his banking empire and allow for future expansion. Through action like this, Giannini demonstrates that he was serious about striking his claim in New York, and gradually the market stabilizes. Jack Morgan attack ultimately proved unsuccessful as Giannini firmly established his banking presence in New York. But what neither Giannini nor Morgan realized that an unprecedented crisis is about to bring both of them to their breaking points. Prosperity is just around the corner, said hopeful headlines, but around the corner with the lengthening breaklights, and a whole new class of citizens appears in American society. The new poor. Black Tuesday devastated the banking industry. Stock value plummeted, leading to massive bank withdrawal and widespread bank failures. Many banks, having invested heavily in the stock market, faced insolvency. The crash endorsed public confidence in financial institutions, triggering a wave of bank runs. Giannini's Chancellor miracle. Stock also plummeted, causing significant financial loss for its shareholders. In the attempt to defend the value of Chancellor stock, Giannini supported the market by buying all of the 230,000 shares of Chancellor America that had been dumped on the San Francisco Stock Exchange. It was a hasty and rather reckless action, which unfortunately did not serve its purpose. As a result of stock market fluctuation, internal, it caused a risk within the Chancellor boardroom. While Giannini struggles to maintain control of America, his biggest adversary is poised to exploit the situation. Sensing weakness, Jack Morgan lays another stock rate on America, causing the share price to fluctuate severely. And just like his father, J.P. Morgan hated competition. He has such a strong presence on Wall Street. Through his words alone, he could move the market in both directions. And if he says America is a bad company, the market will sell all the stocks, and he instructed his people to buy them cheaply and force themselves to be on the boat as well. The CEO of America of the time is Elisa Walker, a former associate of Morgan. Soon a larger conspiracy unfolds. The company executives and the board of directors of America begin plotting in secret to oust Giannini as their chairman. Having no options left, Giannini submits his resignation from America, the very company he founded. Along with his resignation, the majority of the California direction are replaced with New York ones, an outcome Jack Morgan has long desired. Morgan may have gotten the better of Amadeo Giannini, but he underestimates Giannini's determination, and now he vows for revenge. America is a banking holding company Giannini founded to take on the established bank in New York, but after a series of orchestrated attacks involving Jack Morgan, Giannini is forced to resign from the board in September 1931. It's a stunning settle for the banking titan. Sometimes in life and business, you can do everything right, and things will still go wrong. The key is to never stop doing what's right. Despite his resignation, Giannini remains a large shareholder of the company. He soon realized he can turn his loss into victory. He immediately forms associated Transamerica stockholders and begin rallying stockholders to turn against their current board and management team. At this time, Giannini, as a banker from the West Coast, had a much better reputation than the ruthless Wall Street type. He realized that the majority of the shareholders would side with him simply because of his character. With enough support, he begins a process fight during the shareholder meeting. If he wins, he will change the company's role and will change the banking world, especially on the East Coast, forever. Sweeping changes were announced yesterday in the official staff of the Bank America Blair Corporation, the security distributing company controlled by Transamerica Corporation. They include the withdrawal from the organization of 9 former officers, and it turned out the majority of the shareholders support Giannini. When the company is located as chairman of Transamerica and is holding Bank of America, the board, mostly Morgan loyalists, is fired. There are only a few moments of history as epic as this. Here is this guy, started for nothing in the West Coast and came to New York and stole the king of Wall Street. And he did that without being a ruthless robber baron. When Giannini arrived in Los Angeles at Union Station, he was welcomed as a hero. He was cherished by 1,000 employees and stockholders, eager to thank him and shower him with praise. His return home to San Mateo was compared by San Francisco Dominico to the equally victorious one of Julius Caesar returning to Rome. A.P. Giannini managed to build Bank of America into a financial empire because of his honesty and willingness to work hard. Even as a young man, he enjoyed learning new things and developed a passion for numbers. A fantastic place to effectively learn to better with numbers and data in Brilliant. It's a platform where learning is active, featuring thousands of interactive lessons in math, data analysis, programming, and AI. One common trait among successful financiers I have covered is their proficiency with numbers, with the majority involving play card games, developing a strong intuition for statistics can provide a critical edge in finance. Brilliant's introduction to probability lays a solid foundation for mastering any number-related subjects, while their data visualization courses help you make sense of complex data. Best part, you will find it much easier and faster to master than any traditional methods. Their first principles approach help you build understanding from the group up. Each lesson is filled with hands-on problem solving that lets you interact with concepts, a method proven to be 6 times more effective than watching lecture videos. To try everything Brilliant has to offer for free for a full 30 days. Visit Brilliant or click the link in the description. You also get a 20% off annual premium subscription. In 1932, A.P. Giannini returned to his desk at One Pound Wall Street, revitalizing the Bank of America amidst financial turmoil. Giannini's Back to God's Hands campaign restored public confidence, increasing deposits by $15 million. Despite regulatory challenges and powerful adversaries, Giannini's leadership ensured the bank's survival and growth. By the end of the 1930s, Bank of America became one of the most prosperous banks in America. But as the world plunged into war, Bank of America decides to set aside its rivalry and join forces with fellow bankers, including J. Morgan. Together, the banking industry provide all the financing needed to return America into the most powerful world machine in history. Happy music. By 1945, Bank of America became the largest commercial bank in the world. Giannini was truly the ideal banker. Remember, the banking industry is all about confidence, and Giannini's key to success was his ability to inspire confidence in people. Seeing his vision accomplished, Giannini finally retired and donated half of his fortune through education and research. In the spring of 1945, Amadeo Giannini died in his sleep from heart failure. Amadeo Peter Giannini, an immigrant son who founded a financial empire, including the world's largest bank, died at his home, 7 hours in nearly cemetery today. His age was 79. Giannini's influence permeates every corner of American society, especially in California. Giannini's funeral took place on June 6, 1949 at Mary's Cathedral in San Francisco. More than 1,500 people filled the cathedral. Thousands more lined the streets outside to witness the funeral procession. He was buried in private burial service not far from his home at the Holy Cross Cemetery in Colma. In keeping with AP's wish, all Bank of America branches around the world remain open all day, serving people. And Giannini truly built a bank for the common people and has stood by the ideal until the very end. Despite creating the largest private bank in the world with over $6 billion in assets and 515 branches at this time, Giannini lived modestly and did not accumulate significant personal wealth. At the time of his death, A.P. Giannini's personal estate was only valued at $489,278. In the late 1950 and early 1960s, the U.S. economy experiences robust growth and stability. Post-World War II, prosperity continues. Consumer demand is high while unemployment is low. The early 1960s, in fact the 1960s itself is an era of incredible economic boom, far more so than the 50s and the 70s, and particularly for the generation that goes to school. Beginning in the early 1960s, nobody ever worried about getting a job. There were shortages everywhere of skilled labor and particularly intellectual labor. The universities were booming. California's economic booms, becoming a powerhouse driven by diverse sectors as biggest bank in America. And after the passing of Giannini, the Bank of America needs new leadership to capitalize on this economic boom. The new CEO at the helm of Bank of America is Clark Bass, and he knows he must do what it takes to focus on growth of the company. Clark Bass was signed, but He was a banker's banker. He knew the banking business from A to Z. He ran the bank by delegating, made very good appointments, had the respect of everybody, and Clark got grow going again. In 1949, Bank of America launches Bank of American Card, bringing credit cards to 2 million Californian families. This innovation sets the stage for modern credit, revolutionizing consumer spending and financial advice. This was groundbreaking at the time. Bank of America gave ordinary customers easy access to credit, allowing them to buy goods and services with them. It enabled cost-free purchase and boosted consumer spending and stimulated the economic growth. California's economy booms, and Bank of America deposits grow exponentially, reaching over $12 billion assessed by 1961. The bank's strategic investments in burgeoning industries like Silicon Valley sector and polytechnic greeneries of Napa Valley set the stage for future success. For a company or for an individual to succeed, a major factor is teaming. The bank thrives because it capitalized on an area of economic growth, particularly in California. Bankruptcy homes don't last forever, and the wealth of the economic cycle are poised to shift. As the 1970s dawned, America is thrown into chaos. 5 data authorities say that since being set by an arsonist badly damaged the Bank of America branch near the University of California's Capitol Hill today. These events were part of a larger wave of anti-establishment sentiments fueled by the Vietnam War and economic disillusionment. As a new leader of Bank of America, Tom Cousins faced immense pressure. At the time, Bank of America had become a giant bureaucratic organization, a very common phenomenon once a company grows to a certain size. As the bank becomes increasingly complacent, competitors see an opening through Clifford. They develop new technologies that potentially disrupt Bank of America's entire business model. And the biggest threats come from a much older bank, Citibank, in the early 1970s. Citibank is one of the oldest banks in the history of America, and it was one of the largest bank in the country. After facing near bankruptcy several times in past decades and drought requiring government bailouts, the bank has finally stabilized, but it will take a visionary leader to regain its past glory. Walter Wriston grew up in a prestigious background. From an early age, Wriston is a risk taker because his family and network will always be his safety net. He's not afraid of fail, and we see that with a lot of great entrepreneurs. But some of them is because they come from privileged background. People like Bill Gates and Mark Zuckerberg. After becoming the president of Citibank in the late 1960s, Walter Wriston knows that to take the bank to the next level, he must look for the next big thing. Though Chemical Bank rolls out the first ATM in the United States in 1969, Wriston immediately sees its potential. The launch of automatic teller machines is a massive success. They just look like more cash machines built into bank words. But to Citibank, they are an 50 million gamble that the consumer can be out and win with electronic service. Over the next year, a pair of electronic tellers will be built into the vestibule of most of Citibank's 270 metropolitan area branches, creating the largest electronic funds transfer system in the nation. Realizing the competitive disadvantage of not having ATMs, Bank of America eventually implements them. While ATMs eventually reduce operating costs and enhance customer service, for Bank of America, it's already too late. Citibank surpassed Bank of America as the top conventional bank in the United States. The situation facing Bank of America is changing, but Tom Clausen has one more trick up his sleeve. In his final year, Clausen took steps to present the bank's earnings more fully favorably. This involved legal but aggressive accounting measures such as market long held a set up to market values to show higher earnings for 1,980. This allows Clausen to boast about the bank's performance, enabling him to retire gracefully while handing the hidden troubles to the next leader of the bank. After Clausen's retirement, Bank of America elects Sam Marcos as the new president. Marcos grew up in a prestigious family. His father was the president of University of Relentless in Southern California. After graduating from Stanford, and with his family connection, his career accelerated quickly, propelling him to top positions at the Bank of America. Marcos knows his predecessor has left him a mess. To foster growth, the bank must embrace change, and he knows instead of building a new business, it's easier just to acquire a successful one. For B of A, acquisition of Schwab would be the most forward-looking move the bank has made since its pioneered computerized check handling in the 1950s. Inspired by Walter Wriston of Citibank, Marcos realized the importance of technology. His father was the president of University of Redlands in Southern California. After graduating from Stanford and with his family connections, his career accelerated quickly, propelling him to the top position at Bank of America. Marcos knows his predecessor has left him a mess. To foster growth, the bank must embrace change, and he knows instead of building a new business, it's easily just to acquire a successful one. For B of A, acquisition of Schwab would be the most forward-looking move the bank had made since its pioneered computerized check handling in the 1950s. Inspired by Walter Wriston of Citibank, Marcos realized in the importance of technology. Sam Marcos transformed Bank of America by modernizing its technology infrastructure. Despite the challenge, Bank of America increased its operating profit by 75%, demonstrating resilience in a tough economic climate. A crisis brings poised to undo everything he has accomplished. A federal grand jury in New York is investigating the collapse of a mortgage securities deal that has cost the Bank of America Corporation $37 million, according to a state regulator from Delaware. Amcost is a mortgage security firm that sells higher, short-term mortgage-backed security to savings and loans, with Bank of America acting as the escrow agent and trustee. The scheme permits risk-free returns backed by spouse insurance and meticulous escrow instruction, but its work built on fraudulent appraisals and non-existent properties. Now, unlike what happened in 2008, initially Bank of America is estimated to lose $8 billion, but as the schemes unfold, the loss quickly balloons to $95 million. Worse than the monetary loss is the damage it inflicts on the bank's reputation, and Amcost leadership at NMEC was the bank's pure haven. A sneak attack that stops the bank from its myth of impressionability is the beginning of a relentless barrage of history balances moral and stock price that would leave the great bank crippled and Sam Amcost's career in disarray. During the early 1980s, Bank of America faced a series of interrelated crises: the Third World Debt crisis, the Penn Square Bank failure, economic pressure from high interest rates, and internal management challenges. The event collectively changed the bank's financial stability and damaged its reputation. While the bank is in crisis, one may see a golden opportunity for a hostile takeover to remark Bank of America in his image. His name is Sandy Wells. Sandy Wells is a relentless corporate takeover man, growing up in a working-class family in Brooklyn, New York. Wells graduated from Cornell with a degree in government, but he forgoes a career in politics for one on Wall Street. He made his first major fortune by selling his brokerage firm to American Express for $930 million. His specialty was acquiring multiple companies and aggressively cutting costs and streamlining operations to create bigger and more profitable business. It didn't always work, but when it did, it made him incredibly wealthy as a result. But after a failed power struggle at American Express, Wells is forced to leave the company. Undeterred, Sandy will look for an opportunity for a comeback. He soon realized that Bank of America could be it. By the end of 1985, Bank of America found itself in dire financial straits with its stock plummeting. First, interest followed by enjoying great performance during the 1980s. See an opportunity for a hostile takeover. A dying giant inevitably attacked predators, and soon enough, a man known for his aggressive takeover tactics circled the brave. At the end of 1985, Bank of America found itself in dire financial straits with its stock plummeting. First, interest followed by enjoying great performance during the 1980s. See an opportunity for a hostile takeover. A dying giant inevitably attract predators, and soon enough, a man known for his aggressive takeover tactics across the play. Sandy Wells secured billions from Syrian Lehman, an investment bank, and Ambrose proposed a merger where he would become CEO, vowing to turn the bank into a superpower. By America leaked the information that Sandy Wells were attempting to take over the bank, and the bank stock immediately jumped, indicating that the market believed that Sandy Wells and his lieutenant Jamie Dimon would be better leader for the bank. There was an extraordinary cultural compatibility between Wells and Giannini. Both had built giant corporations based on a family culture, with emphasis on corporate family was more than a management style. It answers a psychological needs to be constantly shared by the loyalty that only family will give. He hired all his relatives, but Sam Armacross realized that if Sandy Wells took over success, it will mean the end of his career. But Sandy Wells soon became the least of his concern. After years of poor performance, the board of Bank of America authorized a coup to replace him with an unlikely candidate. The former president of the bank called as Mr. Armacross' replacement. Banking sources, the board of directors is expected to name Cousins, the president of the World Bank until last June, and the chief of Bank America until Armacross took over 5 years ago. Cousins knows that to keep the bank independent, he must fend off any takeover attempt from first Intertaste and Sandy Wells. To do that, he only has one option left. He was considering what's called a poison Wells pure as a defensive strategy to prevent or discourage hostile takeover attempt. To discover any takeover attempt, Cousins utilized a poison pure strategy by issuing new shares to existing shareholders to dilute the ownership percentage of potential acquirers, making takeover more expensive and less appealing, to make Bank of America less viable for takeovers. He sold many of its assets, including the famous College Square. The Bank of America Corporation said yesterday that it was not negotiating a merger with the First Interstate Bank Corp or anyone else. This statement followed a report in the New York Times yesterday that First Interstate had approached the big bank with a friendly merger proposal. The mid to late 1980s are a transformative period for the U.S. economy and banking sector under President Ronald Reagan's administration, marked by robust economic growth, deregulation, and a focus on free market policies. Real economics spurs economic growth. In the late 1980s, Bank of America achieved a dramatic turnaround under A.W. Closing leadership. By the end of 1988, the bank returned to sustained profitability with net earnings of $736 billion. The third best in its history. The bank's stock price soared from $6 to over $19, making it the world's best performing bank stock in 1988, approaching the new decade of the 1990s. The banking industry begins to go through just a major shift. But this time, Bank of America will be there to see it. The 1990s were a euphoric period for the banking industry after his failed attempts to take takeover Bank of America. Senegal, along with Jamie Dimon, scored a battle with Citicorp, creating America's largest financial institution. At the time, Mark Marco is the CEO of Bank of America, and he is determined that his bank will not be outdone by Senegal, having decided by that their safety in his number. Two pair of American bank announced $90 billion worth of merge Monday, backing up to compete more efficiently in an international industry that increasingly impressive size. As banks like Citigroup and Bank of America expanded rapidly, they became intertwined with various financial sectors, blurring the line between commercial and investment banking. But their unscrupulous expansion will have unforeseen consequences. This is gonna be one of the worst days in financial markets history. It was a manic Monday in the financial markets. The Dow tumbled more than 500 points after two pillars of the street tumbled over the weekend. The collapse of Lehman Brothers and the ensuing market panic sent shockwaves through the banking sector. Despite its size and strength, Bank of America is not immune. The acquisition of Countryside Financial, once seen as a strategic move, now burdens the bank with those six mortgage assets, while Bank of America faced significant challenges in 2008. Its situation was not as dire as some of its peers. Unlike the bank, which required multiple ballots to stay afloat, Bank of America managed to weather the storm. In hindsight, perhaps it was a blessing that Senegal failed to take it over in the 1980s to have stabilized the financial system. Bank of America is forced to acquire Merrill Lynch, saving it from the same fate as Lehman Brothers, but ultimately the Fed stands in with the help of a $45 billion government bailout and excessive management actions. Bank of America was able to navigate this crisis, ultimately emerging battered but intact. But even that's not enough. Bank of America faced internal dispute and power struggles, leading to the resignation of its CEO Ken Lewis by 2011. First, he lost a chairmanship. Now he's getting ready to leave to spot. Bank of America's CEO Ken Lewis stepped down in December. The new CEO is Brian Moynihan. He grew up in a large Roman Catholic family in Manchester, Ohio, the sixth of 8 children in a middle-class household. Julia's father, Giannini Moynihan, was known for his humility and a very down-to-earth style. He knew that in the end, the banking business is all about confidence to truly boost the bank's financial and image. Moynihan needs someone who can inspire confidence in investors like no one else. Warren Buffett is investing $5 billion in BFA in exchange for a 6% dividend in stock. Bank of America runs into trouble over mortgage investment. The move has already paid off for Buffett. Buffett made $350 million on previously when stock price soared. After Warren Buffett's vote of confidence and under the leadership of Moynihan, Bank of America embarked on a remarkable journey of recovery and transformation. The bank focused on stabilizing its balance sheet, reducing its exposure to risky assets, and streamlining operations. In 2010, 24, Bank of America remains a dominant financial institution focusing on digital transformation and sustainability, achieving robust financial performance despite economic uncertainties. It reports strong earnings and increase its quality dividend, strengthening confidence in its future prospects. But as the bank expands, the bank continues to struggle with the weight of its own bureaucracy. It still faces ongoing consumer complaints in 1024 about fraudulent transactions, unauthorized accounts, misleading promotional practice, withheld credit card reward, excessive fees, and poor customer service. Issues include slow response times, delay in account handling, and regulatory non-compliance, resulting in multiple fines and penalties. When you are a big bank, it's really hard to fail because the government always seems to have your back. But for a bank to truly thrive in the long run without being taken over or outserved by competitors, it really just needs one thing. You have got to do right by the customer. It's all about the brand of trust.